Thank you, RETCON, for having us out. I appreciate being able to come out here. I haven't been on stage since December, where we got to announce a marquee project in a distressed market, rather middle market, being Memphis, Tennessee, which is just America's backbone of infrastructure, really should be investment, as well as logistics all the way across the country, where it's been previously overlooked until this high-powered takeover of asset classes and investment surged over, with XAI's significant investment being placed in Memphis as well as South Haven, Mississippi. It called us to throw it on our radar a little bit and say, all right, what's going on in Memphis? What does everybody else see out here, aside from regional access there? What we saw was rich enterprise budget out there, research innovation there, with health being there, St. Jude, Le Bonheur Children's Hospital, University of Tennessee Health and Science. And it taught us to overlook just typical data points that really would drive investment, that being AMI, that being density, with that just kind of being a sprawled, high population, large mile radius market, to where how can we gather investment? How do we get alignment really in a public-private partnership to go drive growth in a region that has previously not been exposed to it? It used to be like the hub of innovation back in the 70s and 80s, and then we look back at it now in this generation. How do we make it make sense? You have to have business-friendly utility providers, business-friendly municipality. It's going to go orchestrate and make sure that it aligns with your project-specific timings, as well as capital partners that align with you and understanding that, okay, this market may not have the traditional metrics that go drive traditional real estate investment, but it might make a lot of sense for this. In Memphis, I was able to form and kind of really refine our thesis, which was mixed-use real estate surrounding high-performance, high-powered compute really makes a lot of sense and kind of creates a positive feedback loop. When I mean mixed-use real estate, I mean office to go support that as ancillary investment, to go drive innovation. These could be incubation offices to go be pair employers with university students, or these could be multifamily dorms where they're closer access, closer proximity to the jobs, job fairs, et cetera, and industrial real estate as well there. So in Memphis, we were able to kind of take a white sheet of paper out and say, if we were to do this all over again, how would we go from market to market and go accelerate growth, accelerate investment, and make it as attractive as possible for institutional investors? And through that, in our partnership with Craig International, which that's who I have Hunter Hernandez with me as well. He's currently with Bormac, formerly with Craig International. We're able to take this model and go accelerate this and drive it into markets like Nevada now with Fan over there, gentlemen. So I appreciate y'all having us out today. That's just kind of how we'll preface there. Then I'll kick it off to Hunter to kind of just go into his background and then how we got here today.
Well, my background really spans from my time with Craig International. And with Craig International, we're a master planned community focused development company. And we've had many experiences in the mixed use sector as well, with our one main flagship being District 121, located adjacent to our master planned community, Craig Ranch in McKinney, Texas. That being a 6-story Class A office building, first of the kind in McKinney, which was completely leased up, I believe, in less than 24 months. Right. And along with that, we have grade A retail all around it, with some of the finest restaurants in the DFW area, spanning from Mi Casina all the way to Bob's Steak and Chop House, paired with that 132-key boutique hotel, and a 0.8 acre park, which was provided to us by the CDC of McKinney. But we took that thesis and paired it with, what if we added a data center space? What if we went and took this to other different markets? And really, that's kind of this smart city innovation hub that we've come up with. If we added multifamily into this project as well, it becomes very sticky. And this test case, we've seen also in North Texas, people are not willing to walk more than 2 blocks from where they work or where they live to go eat at restaurants. So if you have the ability to combine everything all in one condensed space, it becomes very sticky and a very successful development.
I agree, Hunter. And especially with the data centers' attractive yields that don't really reflect traditional real estate investment, you're able to do unique things like absorb the land costs from the multifamily or the office, where those assets have previously been dispositioned or non-investable post-COVID there. Mm-hmm. So there's a lot of dry powder around there from a lot of institutional partners that really need to have the ability to go out and deploy it. So what we can do on the front end by providing that high-performance compute solution is able to then go create a more attractive basis point of entry there for other institutions. So It's been unique to collaborate with guys who have taken the traditional approach there, and what y'all did in McKinney was unique there to really create it and be a centralized innovation hub. Technology, especially y'all getting your tech park designation there.
And I will also add one other part to this with the smart city hubs is corporate relocation. This is a big factor with what we're doing. With the high performance compute, we can incentivize corporations to relocate into our adjacent office spaces, as well as have workforce housing with the multifamily units. So it becomes one ecosystem for everything: live, work, eat, and play.
Yeah, it's an extension on that previous thesis there of urban density. And I would say the main point for the municipalities as well is how do we go attract the investment up front of these investments, and how do we go get access to the enterprise, right? Well, right now, let's just use FedEx as a perfect example. They spend about $4 billion annually in the cloud. It's divided amongst hyperscalers. So they're shipping off $3.5 billion to AWS. That's offshoring that tax investment, which could be localized in Memphis itself, given the ability to go invest in that market. They spend a little bit with Google as well. Google just went and built a data center in West Memphis, Arkansas, and asked for pretty significant incentives. So they took Memphis dollars, brought it over to West Memphis, and then got incentives for doing so. This is something that when it's brought to municipal leaders' attention as well as state leaders, they're like, crap, how do we create the ability for them to go localize that investment? How do we get that sales tax there? How do we go drive regional growth? They've been trying to solve that problem philanthropically in Memphis, and we just gave them the platform to go extend that investment. And now we're working with the other local institutions there as well. But we'd like to open it up for questions because we know that was a lot of information. It's pretty dense, but if there's any crowd questions, we can move forward that way.
What are the constraints on development in terms of utility infrastructure versus lucrative free and unset?
I appreciate that. So I'd say with utility infrastructure, we're really being combative of that up front with us having the ancillary investment as well. We're able to go justify, and the utility providers are able to then justify their investments into these sites because we're working in less megawattage typically than like a hyperscale deployment. But with having multifamily units where they're metered per unit, they're able to hit their CapEx targets to expand their distribution systems out there. So we really alleviate that with our planning up front.
Hey, good morning. This is Joe Levitt. I'm a commercial broker here in Vegas. My question is, raising capital on the front end is one problem, and then on the back end, a disposition when you have all these asset classes. What kind of challenge are you seeing with, if you've done it yet, selling off the asset to a group that, I think our challenge that we're seeing is how many groups want multifamily, office, and retail all in the same acquisition?
100%. So with our capitalization structure and how we produce returns too, we're looking at these as recapitalized assets to where our exit liquidity wouldn't be just a straight disposition where we're displacing of these. We would just recapitalize these as we sign up more tenants within the space that are investment grade and just go get more efficient debt and then just produce yield with those differentials there. Not looking to completely get rid of these assets because they're pretty bespoke as of now. Yes, sir.
I was just wondering if you guys could talk about different fuel types, peaker plants versus solar, other arrays.
Absolutely. We typically favor getting utility delivery into the site just from a timing perspective, and just with our need, power not being as massive, not really triple-digit, four-digit numbers, we're not necessarily needing to go behind the meter just yet. We also enjoy partnering with utility providers and being able to utilize their credit rating as well to go enhance the development and go enhance their deployment needs there, where we seek to partner with utilities as opposed to oppose them in a sense by being on site for our own generation there. That being said, solar can provide a good redundant source into the site itself. We do have a solar partner that looks at doing that with us, but our preference is always the utility.